All right, so they're pretty well known for tax evasion. As I've said earlier, tax evasion is illegal, right? Whereas tax avoidance I use the word may be legal. All right, so there's a lot of gray area there's a lot of gray area in terms of tax avoidance, right? Right? If you want to avoid taxes, then you need to go to see a tax accountant or a tax lawyer to enable you to avoid taxes in a legitimate way. But any form of tax evasion is illegal, right? And it may come under the Financial Advisors Act, right? If the person evades taxes via the products designated, the designated products under the Financial Advisors Act. Okay. In any event, if there is suspicion of tax evasion, right, then the financial advisor representative, right, that's yourself probably, then would have to talk to the senior management, right, to see whether there are sufficient grounds for suspicion in terms of tax evasion, and whether therefore enhanced monitoring need to be done. And if the enhanced CDD measures turns out negative, then whether or not to discontinue the relationship, and then does the necessary reporting, as I will discuss with you later on, right, to the STRO for suspicious transaction reports. Right? Now, just down the line, the third line from the fourth line from the bottom of the paragraph 8.66, right, this requirement applies to serious foreign tax offences. Underline that, even if the foreign offence is in relation to a type of tax for which an equivalent obligation does not exist in Singapore. All right, so this is a tall order. All right, I just read that again. This requirement applies to foreign tax offences, even if the foreign offence is in relation to a type of tax for which an equivalent obligation does not exist in Singapore. Right, then they set out the thing in Appendix B of this guideline, right? In Appendix B of the guideline. Okay, so right, since we are at Appendix B, let's take a look at Appendix B to give you an appreciation of what we are talking about here. All right. So Appendix B, if you turn to Appendix B very quickly, just a few pages back to this chapter. Right. Now, Appendix B gives you some examples of suspicious transaction, which I will come to it a bit later. But we are now looking at tax-related offences. So if you turn to Appendix B, I just give you some time to turn to Appendix B. Now, in particular, if you are there, now look at B7, right? Look at B7. Now, this is what the notice requires you to do in relation to serious tax offences. All right. If at B7, the heading reads tax crimes related transactions. Okay. Now, some of these may not be applicable to Singapore in terms of the tax regime, but notwithstanding that, right, if a customer is from a foreign jurisdiction and if the financial advisor is suspicious of tax evasion, then it is a suspicious transaction, and therefore the necessary suspicious transaction report has to be made. Now look at B7, if you're already there, and cast your eye down to B7, 1 to 7. Okay. Now this gives you an idea of the types of tax crimes that will come under FA number 6. Okay. All right, very quickly take a look. Negative tax-related reports from the media or credible information sources. Negative tax-related reports from the media, newspaper, CNN, CNA, Sky News, or whatever, right? or credible, it must be credible, of course, credible information source, right? Not the fake news type that sometimes you do get once in a while. Okay, then B7, to unconvincing or unclear purpose or motivation for having accounts open in Singapore. Right? So what is the purpose, right, to open an account in Singapore when you're in, say, ABC country? Okay? Reinvestment of funds back into the original country or jurisdiction after being transferred to another country or jurisdiction, often a tax haven. Alright? You know what's a tax haven, right? So, countries where they do not have, taxes in a way, right? With poor track record on CDD or record keeping requirements. Alright, these are probably the non-FATF members or non-cooperative countries that the FATF talks about. Life insurance solutions used for illegal purposes, right? So they want to evade taxes, so they buy insurance and then they give up the policy and so on, to and fro, keep on switching back and forth, turn back to cash. Right? Accounts managed by external asset managers who may not be adequately regulated or supervised. Again, in foreign jurisdictions that lack the standards against money laundering or terrorism financing. Okay? Purchase or sale of large amounts of precious metal by a customer underlying which is not in line with his usual business or background. Alright? So if a customer who is trading in textiles and all of a sudden he buys some large amount of gold or silver or whatever, right? Therefore, or diamonds and so forth, therefore, can be a suspicious transaction. Purchase of bank checks on large scale by interim customer. Alright, so these are tax-related crimes, as it were, alright? And as a result of which, if you turn back to 8.6.6, right, those are the examples that the FAA number 6 has given you. Okay. Now, reliance on third parties, we have done that in earlier. So I do not want to repeat that. Okay. But I just want to draw your attention to 9.4. Okay. Again, here it relates to independent and public assessments of overall money laundering and financing terrorism regime to which this third party is subject to, such as FATF or FSRBS Mutual Evaluation Report and the IMF World Bank Financial Sector Assessment Program reports and reports on the observance of standards and codes. Now, I'm sure your legal and compliance people doing this particular issue on money laundering and terrorism financing will have access to all this. In fact, if you're interested, you can actually go online and get hold of some of this. Reports so that you have a better appreciation in regard to this issue of relying on the third party, right, to conduct the CDD measures. Okay. All right. So So I just move on quickly, and that's about it in terms of the third party. Right. But just before I leave that point, just to make sure that you follow 9.6 closely. Alright, the FAA notice number 6 prohibits, underline that part, prohibits the financial advisor from relying on third party to carry out ongoing monitoring. This I talked about earlier. So just remind you of this particular point. Okay, you can rely on a third party to do the CDD measures, right? But you cannot rely on a third party to do ongoing monitoring. That comes back to the financial advisor concern. Okay. Right. So, Now, very quickly, we move down to paragraph 12. As I've said earlier, this is a long notice, especially the guideline. The notice itself is pretty short, but the guidelines here are long. Okay. Now here we are looking at suspicious transaction reporting. Now 12.1 should ensure, so this ensuring thing, that the internal processes and procedures are there for you to see whether it warrants a filing of a suspicious transaction report. And this is done without delay. All right, I underline that please. via an SCR is completed without delay and should not exceed, underline that one, 15 days, right? It should not exceed 15 days, right? Of the case referred by the relevant employee, representative, or officer, unless the circumstances are exceptional or extraordinary, right? So therefore, there's a time limit for you to file your suspicious transaction report. If any person in the company, all right, either the financial advisor representative that faces the customer, or any employee that does the, collecting of document or documenting document or whatever, or any other officer, even a compliance officer for that matter, after looking at the materials and the information that has been gathered, all right, finds that the transaction is suspicious, all right, then as I said earlier, then it should be reported to the one reference point. I just want to repeat that, one reference point. Usually it's the legal officer or the compliance officer or the risk management officer. And these should be elevated to senior management to decide whether it warrants filing of a suspicious transaction report. And of course, here it gives you further detail that this report should be filed within 15 days, right? Should not exceed 15 days, all right? So meaning to say, well, within 14 days of that particular report, the financial advisor must file this STR report with the suspicious transaction office, that's STRO, under the Commercial Affairs Department, the CAD. And as I told you earlier, it's at Cantonment Road for now. And a copy to the MAS. Okay? Now, financial advisors should also note that an STR filed with the STRO would also meet the reporting obligation of the TSOFA. What is this TSOFA? Well, this is the Terrorism Suppression of Financing Act. Right? This is in terms of terrorism financing. Right? So, as I told you earlier, terrorist organizations and crime units, the criminal conduct thing, right? They do use money laundering techniques, right, in order to launder money so that the money appears legitimate, and then they use the money to fund terrorist activities. Right? So this particular STR that financial advisor files will also be in relation to the terrorism financing activities. That's why usually for this particular notice, it always goes together with terrorism financing. Okay. Now here at 12.3, it gives a lot of examples, again back to Appendix B of these guidelines. Okay? Now here I just want to emphasize that the examples are not, underline the word not, under 12.3, not intended to be exhaustive, and are examples of the most basic ways in which money may be laundered or may be used for terrorism financing purposes. Okay? So identification of suspicious transactions should prompt further inquiries, right? And where necessary, investigation into the source of funds, right? So where does the money come from, right? Source of funds, right? Are the funds being layered, right? The layering process, right? Are the source of funds being placed out in the first instance, right? From proceeds of criminal activities, okay? Right? So the financial advisor should also consider filing an STR if there's any adverse news on his customers in relation to financial crimes. Right? So now underline the next sentence. A transaction or activity may not be suspicious at the time, right? When you first have, when the financial advisor first has a business relation with the customer. But if suspicions are raised later on, either in the media or by your own inquiry or investigation, and then a report need to be made, right? So, and to put it in another way, the financial advisor must always be vigilant, right? Not only the financial advisor representative, right, facing the client, advising the client. More importantly is the compliance people, right? The compliance officers, the legal officers who do the legal documentation, all right, and of course the risk management people, right? And this considered as a second line of defense, right? The compliance and the risk people and the legal people. The frontline people are the first line of defense, as I've mentioned to you earlier. These are the sales people. Second line is the compliance people. And of course, the third line is the audit, right? The internal audit. Right? So if any of these three lines of defenses, people from these three lines of defenses suspect a suspicious transaction, right? Then you need to elevate this to the single reference point to see whether it warrants reporting. Okay. Now 12.4 sets out the what you should do after suspicion has been raised, right? So in addition to reporting, there's a third line there. In addition to reporting the suspicious activity, a financial advisor should ensure the appropriate action is taken to adequately mitigate the risk, right? Mitigate the risk. That means to reduce the risk, to contain the risk, or the financial advisor being used further for ML and TF activities, right? Money laundering, terrorism financing activities. Right? This may include strengthening its AML CFT processes. Right? So here it suggests that, something has fallen through the crack. Right? There is a crack. Right? Right? These guys have used the financial advisor to launder money. Right? Either launder money for its own sake, to make the money clean, or to launder money for terrorist activities. Right? Either or both are very serious crimes, very serious offenses. If these people do get through, then probably there is a crack in the system, the process and procedures, right? So here the notice is very clear. It may include strengthening its AML CFT processes, right? Now underline the next one. Now, this may also include a review of either the risk classification of the customer or the business relations with the customer, right? So this customer has gone through the crack, and there is suspicion that this person or this customer is laundering money for whatever reasons. Then there's a need to review the status of this customer, right? Appropriate action should be taken, including escalating the issue to the appropriate decision-making level, the senior management, taking into account any other relevant factors such as cooperation with law enforcement agencies and so on. Okay, so this is what is that's what required of the financial advisor in terms of what the financial advisor should do, right, after suspicion has been raised. All right, I just want to emphasize the point that suspicion has been raised. All right, you are not certain. The financial advisor is not certain, but there is cause for suspicion. All right, I repeat that there's cause for suspicion. We will come back to this later. Alright, so there's a cause for suspicion, and therefore, appropriate action should be taken as set out in paragraph 12.4. Right? Now, 12.5 makes it easier for you that the template, how the single reference point, how did the person doing the reporting can make use of this template is again on the MAS website. You see below at the bottom of the page there. I just download that particular template, and you can therefore make the report promptly. All right, and as I've said earlier to you, under 12.1, within 14 days, right? So they say it should not exceed 15 business days, right? 15 business days, right? So the minute you find it suspicious, a decision has been made to file the report, then file it without delay. Alright, so, yeah. So the timeline is not more than 15 days from the date, right? From the date the case has been referred, to the reference point for suspicious transactions. Okay. Right? So, yeah, there's that. However, financial advisors are strongly encouraged to use the online system provided by Stroll to lodge the SCR. So online is much faster. Alright, so you just use the template, use the online method, and then that's that, right? Now, then in the event that the financial advisor of the view that STRO should be informed on an urgent basis, right? Especially where a transaction is known to be part of an ongoing transaction by the relevant authorities. Alright, so you come to know that, look, the police or the CAD or some other authority is looking at this particular transaction, and then that person uses the same transaction or similar transaction with the financial advisor. Then the financial advisor, due to the urgent basis, immediate basis, should give initial notification to STRO, right? Either by telephone or email, and then follow up with such means of reporting as STRO may direct. Alright, on an urgent basis, just pick up a call and call the person in charge at STRO, make an initial notification, make a preliminary report, and then follow up by the necessary, right? This is a matter of time urgency in order to make sure that the appropriate prompt action can be taken. Alright, appropriate and prompt action to be taken. Because criminal groups, they move very fast, right? The minute they are being tipped off, or they hear wind, they hear wind as it were, that something is going on, they will straight away go underground. And then they disappear from the face of this planet, and then it is very difficult to then trace them, right? Then you have to alert Interpol and so on. It's a long process. So the urgency is always there. Alright, if you discover that the transaction is known to be part of an ongoing investigation by the relevant authorities. Now, of course, having said all this, then 12.6 talk about documentation. Alright, so you should document, proper documentation of all what you have done in relation to the transaction, the reporting of the transaction, and the record of the transaction. Okay? So you have to keep proper record in order to enable the authorities, either the police or the MAS or any other authority, including the courts, if the matter should go to court, so that the whole transaction can be reconstructed from day one. Okay? Alright, so we move on. Then very quickly, we'll move on paragraph 13. Paragraph 13 talks about internal policies, compliance, audit, and training, which we have mentioned briefly in the notice provision. This is the guidelines. So, So again, I do not want to go into the details on this in these guidelines. It's quite self-evident and self-explanatory. So take a good look at paragraph 13.1 in terms of having updated and sound policies and procedures, right, to monitor or to comply with the notice of this provision of this guideline and notice, right? Right, then 13.2 talks about group policy. Again, I'm going to leave you with that, right? We have done that before. Now, coming down 13.3, this is compliance. It's a similar thing. And I just want to emphasize to you that 13.3.1, this is important. A financial advisor should ensure that the AML CFT compliance officer, right, has the necessary seniority, I must emphasize that, and authority, right, within the organization to effectively perform his responsibilities, right? So this is the key person, right? This is a gatekeeper, right? This is a goalkeeper, right? Right? To make sure that, the buck stops there, as it were, alright? So this person, this compliance officer must be senior enough and has the necessary authority, right? To ask questions, to make inquiries, to demand, as it were, documents and transactions from the employees and particularly from the financial advisor representatives, right? This is a key role. It must be equipped with the necessary powers to do so. Alright? Alright, so the 13.3.2 sets out the responsibility of this compliance officer. And you can see for yourself under 13.3.2 A to H, right? So overseeing the carrying out of ongoing monitoring of business relation and sample review of accounts. All right. So this is quite a pretty big job. You will do a relevant sample of the accounts of compliance with the notice and these guidelines. All right. Although we say the guidelines are for best practices on the one hand, and I said earlier to you, if you breach the guidelines, right, if a financial advisor breaches the guidelines, or if the financial advisor representatives, if they do breach the guidelines, then consequences will apply. Okay. So here it's quite clear to you, it must be compliance not only with the notice, but also with the guidelines. Right. Promoting compliance with the notice and these guidelines, as well as MAS regulation under Section 27A of the MAS Act, and taking overall charge of all AML CFT matters within the organization. Right. Now I just want to pause there for a little while. You can see for yourself that this role and function is critical, right, in the combating of money laundering and terrorism financing. All right, informing employees, officers, and representatives promptly of regulatory changes. Right, this person also has the task of making sure that he is updated, right, from MAS, from CAD, and from all the other relevant regulatory bodies, including the FATF. All right, and this person should also be trawling the internet, right? Publicly available databases, or what the financial advisor has subscribed to on the private databases, right? That's available on the market. All right, so that's informing employees, right? By internal circular. By briefing sessions internally, or by seminars or workshops, okay? Ensuring a speedy and appropriate reaction to any matter which MLTF is suspected. So prompt action, like I said earlier, within 14 days of reporting, should submit the STR. All right, and then E, and then F, training, I mentioned that, okay? Then G, reporting to senior management of the outcome of the reviews. All right. Senior management should be the top executive committee, or even the board of directors, right? If it warrants the suspicious transaction to be elevated up to that particular level. Right. Senior management is again important. All right. Reporting regularly on key AML, CFT risk management and control issues, and any remedial action arising from any audit. All right, like I said, the third line of defense is audit. So the audit should come up with something. Then this particular compliance unit should make sure that it is followed up as promptly. Eh? Okay, so that covers that bit. All right, 13.3.3 talks about conflict of interest, potential conflict of interest. I want you to take a look at the third line there, which I'm going to read to you. To enable unbiased judgment and facilitate impartial advice to management, underline this one, the AML CFT compliance officer should, for example, be distinct from the internal audit and business line functions, right? Because this person, this unit, right, is the second line of defense, right? Right? The internal audit is the third line. The business line is the first line of defense, the salespeople in particular, right? So this group of people in the compliance unit, and the head of the compliance unit, this compliance officer in particular, there should be no conflict of interest, right? That means this compliance officer must be reporting directly to senior management, or even directly to the board, okay? Or to the CEO, at least to the CEO or the managing director of the company. Right. So when any conflicts between business lines and responsibilities of the AML CFT compliance officer arises, procedures should be in place to ensure that the AML CFT measures are objectively considered. All right, and addressed at the appropriate level of the financial advisor's management. All right. Now, sometimes, in fact, oftentimes in life, in practice, the business people often conflicts with the compliance people, right? Like I say, the business people are there for profit of the company. Right? The profit objective is paramount. They play a very important function, right? Without the business people, without the frontline people, then, well, where does the business come from? Where does the profit come from? Where does the revenue come from, right? So they have a key function of doing battle out there to bring in the bread, right? To bring in the revenue. But on the other hand, the compliance people, well, they have the duty of making sure that these businesses are in line and these are in line with normal business practices and they don't infringe or they don't violate. These businesses do not violate or infringe the anti-money laundering laws or terrorism financing laws. Right? So on the one hand, business revenue. On the other hand, against money laundering, against terrorism financing. So again, where do we draw the line? Right? So the law is quite clear. If you infringe or violate the money laundering laws or terrorism financing laws, then severe penalties will attach. Right? Very severe penalties will attach. Right? Your big fines, your imprisonment terms. All right? But on the other hand, you need the revenue. All right? So therefore, if there is a conflict, then how? All right? All right? So here the guidelines provide some suggestion for the financial advisor that there must be processes and procedures in place, all right, so that the conflicting objectives, right, the conflicting goals of the two functions are objectively considered and addressed at the appropriate level of the financial advisor's management. All right, to put it shortly, the ball lies in the court of the senior management, all right, and that senior management should decide whether it is suspicious, and if suspicious, whether it warrants a reporting or not. Okay, so that will hopefully resolve the conflicts between the business function and the compliance function, and also the audit function. All right. Well, auditors also play an independent role, and auditors also should report direct to senior management. All right, so they will do the internal audit in relation to money laundering and terrorism financing, amongst other types of audit. All right, that the internal auditors are appointed to do. Now, in terms of audit, then the next paragraph looks at audit. All right, so again, you can see clearly for yourself. 13.4.1, the second line there. All right, so there must be a periodic audit, including sample testing, right, going through the transactions, what sample size and how frequent the audit should be performed. And then it says that such audits should be performed not just on individual business functions, all right, but also organization-wide basis. All right, you recall we talked about the organization-wide basis and also the NRA in terms of assessing the risks. Right? So auditors has a different role than the compliance people. All right, the compliance people makes sure that the rules and regulations are followed as closely as possible. The auditors assess the effectiveness of the measures taken to prevent ML and TTF. Okay, I'm going to give you some examples there. Under A, right, determining the adequacy of the policies, procedures, and controls. All right, were there lapses in the last quarter, or in the last half yearly or yearly, depending on the frequency of the audit? All right, generally the audit should be done on a quarterly basis. All right, in that case, then is it adequate? Okay. Are there any suspicious transaction reported to the compliance unit? Is there any missing out? All right. So, and again, the risk-based approach. All right. So the auditors, the internal auditors, will look at it from the risk-based angle. All right. Then reviewing the content and the frequency of AML/CFT training programs. All right. So again, how often are your representatives, your employees and staff, all right, how often are they trained in the AML/CFT training programs, right? So what's the content? Is it just a 1 hour thing, or is it a 3 hour thing, or is it a 1 day program? Because AML CFT can be, as you have seen for yourself, the content is actually a lot, and 1 hour training is not sufficient, right? That's my personal view. So you need to be regularly trained on the basics of the money laundering and terrorism financing. I mean, importantly, the basic is just as an aide de memoire. It's a reminder thing, all right? But more importantly, the latest methods, ways and trends of how criminal groups, criminal organizations place out their funds or layer their funds. Right? So as I said earlier, the FATF does give guidelines and give updates of reports of the techniques and the methods of money laundering and terrorism financing. So there's a need to update the training programs. All right, assessing whether instances of non-compliance are reported to senior management on a timely basis. Right? All right, sometimes the compliance people may not be spot on, right? 110% spot on. So there may be lapses. All right, or maybe the views of the compliance officer is a bit different from the audit view, and therefore there are instances where non-compliance are not reported on a timely basis, maybe a bit late or maybe not reported at all. Then if audit picks up this particular point, then the report must be given to the relevant senior management for them to decide. And of course, the frequency and extent of the audit should be commensurate with the MLTF risk presented and the size and complexity of the financial advisor's business. Like what I have said earlier, maybe quarterly is a good timing, but it all really depends on how big and how complex is the business of the financial advisor. All right, and how many employees are there, the range of products, the types of financial advisory services provided. All right, so if it's a very big organization, therefore, then the timing should be more frequent and the extent should be more detailed. Okay, again, this is a business judgment call. But having said that, I wish to remind the financial advisor representatives and even the financial advisors corporations concerned that the ultimate responsibility lies with the senior management. Okay. Now very quickly then, 13.5 employee and representative hiring. Now we have gone through that earlier. Right. So 13.5.1, we talk about background checks with past employers. All right. Be careful about the PDPA though. Make sure you got the necessary consent and so on. That's in terms of the financial advisor corporation concern. And the financial advisor representative do give consent. Then screening against the information sources, which we have talked about, and then any bankruptcy searches of the person applying to be an employee or a financial advisor representative. Right, these are something to do with fit and proper person, right, in the financial, the banking and financial industry. Okay, so 13.5.2, we talk about credit history checks. Right, these are something to do with the financial soundness of the representative in particular, or with the employee. All right, where they're subject to a repayment scheme, the credit bureau thing, and essentially risk-based. Right. So, okay, move on there. Then training, I do not want to go into detail on that one. So paragraph 3.6.1 is clear, okay. And just the last line there on 13.6.1. New employees, officers, and representatives should be required to attend training as soon as possible after being hired or appointed. All right. If I may suggest, maybe during the initiation period, when the person just come onto the scene, just being employed by the company, then there's this induction or initiation period. All right. So the financial advisor should actually ask the compliance officer to give a maybe 5-minute, 10-minute talk to the new employees, to the new hires, the new representatives, in relation to the risks of money laundering and terrorism financing, as part of the induction or initiation process. Okay, that would be good, and it should be put on record, at least to cover the financial advisor as an employer, right? Now, then 13.62 talks about after initial training. Then underline this one. They should provide refresher training at least once every 2 years, right? So we are talking about updating the employees and financial advisor representatives, their supervisors, etc., in terms of the new techniques. So here it is put into the guideline for financial advisor to follow, to say the refresher training once every 2 years or more regularly as appropriate. Right? So it gives a minimum of at least once every 2 years. All right? If not, then you can do it more frequently if you want, if there's a need to. All right, to ensure that employees, officers, and representatives are reminded. That's a key word there. All right? These people, the employees, officers, representatives, they require reminders, right? Because sometimes people tend to forget, all right? So especially the representatives and the supervisors, their concern is mainly to bring in the bread, to bring in the revenue, which is very, very important, of course, for the company. But having said that, the employees, the supervisors, the officers, the representatives in particular, they must be reminded, hey, there's always the risk of money laundering or terrorism financing. Okay, so this is the guideline. The guideline is there for the financial advisor to comply with or to follow at least. And then the next point there, should maintain training records for audit purposes. So that's where the audit functions comes in, all right? Or the ABC financial advisor representative, right? Mr. ABC or Ms. XYZ. All right, have you attended AML, CFT training sessions, all right? So sometimes I think the CPT hours are also there, all right? So that these employees and officers and representatives are encouraged in a way or motivated to attend these refresher courses. Okay, so audit need to check on the training records, and also in that light, if you move one step up, the second line of defense in terms of the compliance officer, all right. So the compliance officers will need to be concerned with the training records of the officers, of the employees, and the financial advisor representatives. So therefore, there are two levels of making sure that the representatives, officers, employees attend the necessary programs okay, for the purpose of preventing money laundering and terrorism financing. And 13.6.3 talks about the testing part. So how does a financial advisor monitor the effectiveness of the training program given to his employees and representatives? All right, attending training is one thing. Well, this has something to do with ethics also. Oftentimes I do conduct money laundering and terrorism financing seminars for different institutions for CPD hours, right? And oftentimes I have to remind the participants that attending such sessions per se to get the CPD hours is not really how shall I put it? Just me attending is not the point, right? The point is to be able to take something away from attending such seminars, so that particular attendee is more knowledgeable in terms of the requirements of the AML and CFT requirements, right? Okay, so that's the key thing. The reminder to the employees and representatives, the purpose of such refresher training. Okay. So how do the financial advisors, right? How do these companies, right, monitor how effective the training programs are? All right. Now, by testing employees and representatives' understanding of the financial advisors' policies and procedures to combat ML and TF, right? Do they understand the policies and procedures? Right, under FAA Notice Number 6, the provisions under FAA Notice Number 6 and the guidelines. Right, the obligations under the relevant laws and regulations, what I told you earlier, and the ability to recognize suspicious transactions. I underline that, right? Ability to recognize. So it is a skill, right? And as you can know, sometimes these institutions, these financial institutions, they do ask the trainers or even the internal compliance people to set up questions, multiple choice questions, for the representatives and employees to take after the seminar or after the workshop, right? In order to test whether they understand the contents relating to AML and CFT, right? And if they fail, they have to retake the training session or to go for another seminar to ensure that the knowledge is there. They can exhibit, they can demonstrate the knowledge. And hopefully, through demonstration in a test, then they have this ability to recognize suspicious transactions. All right. So that is the key part in relation to making sure that the training programs attended by the employees and representatives are effective. Okay. There's no point a representative or an employee attending the seminar for say 4 hours, 5 hours, or even a day, and playing with computer games on their mobile phones and not listening to what the lecturer has to say. That is a sad thing, but it does happen in real life, in practice, right? Okay. Anyway, moving on. Then, in order to ensure effectiveness, apart from testing the employees and the representatives, then the FA, the financial advisor, should monitor the employees and the representatives' compliance with the policies and procedures and controls that are in place, right? All right. So if the compliance unit, right, if the compliance unit does detect any infringement, any breach, all right, that will show that this financial advisor, representative, employee really did not understand the provisions or the guidelines, or if they understand the provisions and guidelines, they willfully breach these guidelines and notice provisions, and that's bad, right? And in order, if they failed in that light, then whether further training is required, right, for this particular employee or representative. So you can see for yourself that the training requirement is stringent, right? And of course, C says that 13.6.3 says monitoring attendance and following up with employees and representatives who miss such trainings without a reasonable cost. All right, so that is key. All right, in order to make sure that that we can prevent money laundering, or we can counter the financing of terrorist activities, the board actually lies with the frontline people. Right, that's the first line of defense. All right, if the representatives and employees are fully and well trained, all right, and they can recognize suspicious transactions, then the first battle is won. All right, we can stop placement. Like I told you earlier, placement is the first step, and that is a key step. If you can stop placement of dirty money, of illegal money, of criminal proceeds, then there can be no layering, there can be no integration, and therefore there can be no money laundering.